Need funding for your real estate investment deal? Longhorn Investments is professional, reliable, and fast. Currently serving Texas, Tennessee, North Carolina, Missouri, Alabama, and Indiana, Longhorn Investments, LLC is a direct private lender offering short-term acquisition and renovation capital to real estate investors for both residential and commercial assets. With Longhorn Investments, you can receive up to 75% of ARV, finance up to 100% of cost, close in 3 to 5 business days, no income requirements, a streamlined, simple approval process, and no prepayment penalty. Formed in 2008, Longhorn Investments has funded over 4,000 loans since its inception and includes complementary businesses, including a title company and real estate law practice. Longhorn's wealth of experience puts them in the unique position of being able to help investors throughout all aspects of each transaction. To get started today and see why Longhorn Investments is the superior lending experience, call and speak to Lawrence Hopkins at 314-749-7616. That's 314-749-7616. Or visit Longhorn Investments at longhorninvestments.com. Longhorn Investments. Hard money lending simplified.
Universe. Media. Network.
Good day. I'm Samantha Smith with your United States real estate investing news. Miami's Edgewater apartment building Hampton on the Bay served all of its 200 tenants with eviction notices to vacate the premises by July 16, 2021 for completion of renovations. In the wake of Hurricane Irma in 2017, Hampton on the Bay has been undergoing cleanup and repairs of water damage, mold, carpeting and window replacements. Now, according to Denver-based company Aimco, AIR, the aging building is at a point where evictions are necessary to complete the building's transformation. Quoting Rene Rodriguez of the Miami Herald, that shoe came in the form of a letter from Aimco, AIR, the Denver-based company that bought the 28-story bayfront building at 555 Northeast 34th Street in August 2020 for $80.9 million. The letter, which was slipped under the door of tenants and sent via certified email, informed every resident in the building their leases were being terminated on July 16, 2021 so the company could complete renovations that had been ongoing since Hurricane Irma in 2017. Those previous renovations, however, had been repairs to fix the water damage caused by the storm, removing mold, replacing carpeting and the installation of new windows. The new renovations being done by Aimco involve the gutting of all existing units in the aging building and the improvement of common areas to make the property more competitive with the shiny new luxury towers that have sprouted around Edgewater. Unfortunately, the redevelopment project has reached a phase where renovations will impact your apartment home and will block access to it, the letter reads. In accord with the termination option of your lease, we must terminate your lease and ask you to vacate your apartment home on or before July 16, 2021. End quote. The colossal expulsion by Aimco, AIR during the pandemic has put many of the residents into a state of concern. Numerous tenants under the building's eviction order are elderly or have disabilities, which can make relocating a gargantuan and possibly life-threatening feat. Again, quoting the Miami Herald, David Winkler, the attorney representing the Hamilton residents, said Aimco is not being fair to its tenants by giving them such a short window of time to find a new place to live and move out. Quoting Winkler, the owner lied to residents to get them to terminate their existing leases and enter into new leases with an early termination clause, and then immediately sent eviction notices, he said. This bait and switch shocks the conscience, and we are calling on the owner to do the right thing and work with residents to make sure everyone has time to find a new home and move. If not, the owner will be explaining its cruel lies and unlawful actions to a judge. End quote. Even after the building's tenants met with Representative Frederica R. Wilson, Democrat, who wrote a letter on June 4 addressed to Duke McClarty, Director of Government and Community Relations for AIR, this is still an ongoing saga of mistrust and possible unlawful practices that's displacing tenants who have lived in the neighborhood for multiple years. Quoting Jesse Dean Kluger, founder of the Miami-based law firm Jesse Dean Kluger PA, property owners are creating a totally new neighborhood. Whether they're tearing something down or rejuvenating it, older tenants are being faced with this issue. To tell people their neighborhood has outpriced them, even though they have lived there for 10 years, is tough. But people shouldn't be kicked out of their houses. To say, we're making this building beautiful and you need to get out of here, is wrong. End quote. 2 South Florida men have agreed to pay millions after being caught by the Securities and Exchange Commission officials for creating a $2.4 million Ponzi-like real estate scheme. Quoting David J. Neal of the Miami Herald, legally, neither Coral Springs' Larry Broadman nor Lake Worth's Anthony Nicolosi admits or denies any of the allegations in the SEC complaint filed against them in Fort Lauderdale federal court, but that they quickly agreed to pay disgorgement of ill-gotten gains, as well as interest and a civil penalty speaks loudly. The SEC said Broadman used unregistered securities offerings to raise $9.06 million for property income investors, and the company would use that money to buy residential real estate and turn them into rental properties. In reality, Broadman misappropriated approximately $1.12 million in investor funds, which was diverted into his personal account, the SEC complaint said. Broadman, PII, and the property entities also misused approximately $1.2 million in investor funds by paying sales commissions to sales agents, including Nicolosi, despite statements in the offering materials that commissions would only be paid to licensed brokers. A portion of the profits distributed to investors were actually payments funded by other investors, and there was extensive commingling of investor funds. The SEC complaint says from January 2016 through September 2020, property income investors raised that $9.06 million from 156 investors over 26 states. Investors were told Broadman and investors would have a 30-70% split on rental profits and 50-50 on property sales. According to the SEC, about $4.1 million went into buying 12 properties, ranging from $265,000 to $1.25 million. Broward County property records say the aforementioned 3050 Coral Springs Drive building was sold for $1.25 million on August 29, 2019. Another $752,000 was spent on property renovation and maintenance. PII and property entities sold 3 of the properties and collected about $1.04 million in rent on the others. The companies did not distribute any profits from property sales to investors, the complaint said. Based on the disclosures in the offering materials, Broadman was entitled to receive, at most, a total of approximately $312,000 as his share of the profits from the businesses. However, even after offsetting this $312,000, Broadman misappropriated approximately $1.12 million in investor funds, which was diverted into his personal account. Investors were told licensed brokers might be paid up to 10% of proceeds raised in commissions, the SEC said. But, the agency pointed out, none of PII's brokers were licensed, and the $1.2 million spent on commissions exceeded 10% of the $9.06 million raised. Also, at least $124,000, returned to some investors as profits, the SEC said, actually were payments by later investors. The same was claimed about a significant portion of $460,000 from 2 2020 investors. In total, PII, property entities, and Broadman misappropriated and misused approximately $2.44 million of the offering proceeds, the SEC said, end quote. Even though the current housing market is a bit of a raging campfire, the great possibility of a massive downturn looms. Memories and some bank balances still remain tattered from the 2008 recession, which is keeping many Americans on high alert during the still ongoing pandemic, with the possibility of a behemoth eviction crisis. With the ending of the CDC's eviction moratorium, many housing market experts are bracing for what could be a mimicking of some of the darkest times during the Great Recession. Some of the largest cities in the United States are on the list to face a potential housing catastrophe. Quoting Andrew Lisa of Yahoo Finance, all 40 are among the 200 largest cities in the country, but they aren't spread out equally across the nation. States such as Texas, for example, are disproportionately represented with 7 cities on the list. California, on the other hand, doesn't have a single entry despite a population of nearly 40 million and some of the most expensive housing markets in America. With factors such as mortgage delinquencies, foreclosures, homeowner vacancies, and rental vacancy rates, a study using combined data from the U.S. Census Bureau, the Consumer Financial Protection Bureau, the 2019 American Community Survey, and Realty Track, Go Banking Rates identified the 40 cities most at risk for experiencing a widespread housing crisis. To see if your city is on the list, please see the entire list and more statistical information in the news notes. For our quick content suggestions this week, we have How Blackstone Built the Perfect Pandemic Portfolio in Real Estate from Fortune, and 10 Reasons to Think Twice Before Investing in Real Estate, from MSN. To research further, see links and more from these reports in the news notes. I'm Samantha Smith for United States Real Estate Investor News, UnitedStatesRealEstateInvestor.com.